Hey everyone, and welcome back to our monthly market commentary. I'm your host, CEO and founder of Fiat Wealth Management, Brad Gotto. I'm here with my esteemed colleague, as always, Mr. Tim Holland, the Chief Investment Officer of Town Square Orion. Tim, thanks for being here.
Yeah, always good to see you. Brad, this is a little different today. You're in the car. I'm at the
Yeah,
desk.
your
This
setup's
is
different too.
No, we have a new space. This is pretty exciting. But yeah, this
Oh,
is
wait,
this
this
is
is a new
good.
office for you.
Yeah, we moved in a couple weeks ago, close to the old space in eastern PA outside of Philadelphia, but
Okay,
we'd outgrown the space, so we're in some new digs. It's pretty darn nice.
awesome.
Yeah,
Well, these are my new digs. It's a car. So,
it's pretty good. Looks
um,
good.
Yeah, on the move. But we got to give the people what they want, Tim, the
Yes.
monthly market commentary. And so you got to do what you got to do. And so here we are. Uh, so that being said, if this is your first ever monthly market commentary, I will say it's my first from the car. Uh, Tim and I get together once a month, and we take a look back at what's gone on in the market the last month. We take a look ahead at what we think is coming up, and we always discuss a data point that's worth discussing. That being said, once a quarter, we try to look at the broader picture of the last quarter. And so here we sit. And so we've got kind of a quarterly view this month, Tim, that we're going to take a look back on. But before we do that, let me just check in. Other than the move to the new office, how are you? How's the family?
We're good. We had a big trip, got to go to France
Oh,
for
wow.
10 days. And there's four of us, me, Meredith, our kids. Our son's a rising junior in high school, and he's like, I'm not going. And we're like, what do you mean you're not going? We're going on vacation. He's like, I got football. And how do you say no to a 16-year-old who's like, I got football? So
That dedicated.
the three of us went, and our daughter, Meredith and myself, and our son stayed at a buddy's house. And then we're like 8 days in, and our daughter is like, I got to get out of here. I'm like, what do you mean? She's like, I got to go back and work out. I got lacrosse and PT. And I'm like, what? She's like, so yeah, we pulled some American airline miles. So we had a wonderful time.
Oh my gosh.
France was great. We got lucky. It was hot before and hot after, but yeah, it ended up being Meredith and I for a couple of days, which isn't shabby at all. But as you know, your kids are big into sports. When you have kids who are big into sports, and I'm not trying to cry me a river, yeah, it was fun, but it was like, yeah, I got football, I got lacrosse. See you later. So I guess I know what my retirement years are going to
Yeah,
look like. So how about you? But we're good. But how about you guys? How's it going out there in Minnesota?
we're good.
Good.
It's the few months out of the year that are enjoyable to be
Yeah.
here. And so enjoying it as much as we can. We're in the throes of baseball. We got state tournament coming up this coming weekend, and
All right.
then it starts to slow down just a little bit,
A little bit. Yeah, it's all
from the
relative when it comes to
yeah.
sports. Do we
Yeah,
like? How do we like? Go ahead.
we just got off a 2-week stretch where my one son had 13 games in 15 days, and the other son, I think, probably had 8 or 9, so 20 whatever that
Man.
is, 23,
Yeah.
24 games in
Wow.
14 days between the two of them. So we're running around, having the time of our lives. They're both
Yeah.
their teams are playing well, so
Good.
it's been a lot of fun. But
Good.
um, I want to get you back to what you're doing.
Yeah.
I'm obviously a little bit mobile here, and so from a quarterly perspective, on the look back of the last quarter, you could call this, I always name these points. You could call this multiple things. You could call this full circle. You could
Yeah.
call this just give it a minute. I mean, you could call it a lot of things, but Jiminy Criminy, we have kind of a whipsaw from a couple of different perspectives from Q1 to Q2. So a couple of things I would like for you to touch on when we kind of look back in the last quarter. One is just kind of the difference, the overall kind of market performance made from Q1 to Q2, but also oil, been a very hot
Yep.
topic from
Yep.
Q1 to Q2. Then we got some interesting earnings data in there too. If we have time for that, we'll get to that. But I want to start with those first two, and that is just kind of where we ended Q1 and then what happened in Q2 from a market perspective.
Yeah, no, you're right. A lot happened last couple, 3, 4 months. So, as you know, we got off to a pretty good start, January and February. Decent amount of optimism around earnings and around the One Big Beautiful Bill Act and how that might help the economy. And then the war with Iran kicks off, and markets sell off pretty much through March. So March was meaningful enough to the downside to pull pretty much everything down, not just for March, but for the first quarter. And then, as we know, markets bottomed really at the end of March, March 29th, March 30th, and then we were off to the races. And so, rough first quarter, completely different story in the second quarter. The timing was almost perfect when markets finally found a floor. But if you
Yeah.
think about the S&P was up 15, tech stocks, the Nasdaq was up. That was up 22. The Russell 2000 small cap stocks up 22, had their best start to the year, best first half in forever. And to your point, it was really oil going from 70 to 110, pretty much back to 70, which obviously helped from a sentiment and a return point of view as things de-escalated in the Middle East. And then finally, as you also called out, earnings were just extraordinary. The S&P 500 grew earnings 28% year on year for the first quarter, and those numbers really don't start to hit until the second quarter. And so that was a
Yep.
massive tailwind, along with the drop in the price of oil and the geopolitical picture moderating. But really, an extraordinary 6 months from a geopolitical and a macro point of view. But as we sit here in early July, everything's up. Call it high single, low double digits, if not better. It's pretty extraordinary considering the world we've been living in.
Yeah, I mean, it's a crazy turnaround in a pretty short amount of time. You got the S&P, NASDAQ, and Russell up 15, 21, and 21%
Yeah,
respectively, rounding numbers there. The only major index that didn't hit an all-time high in Q2 was the MSCI. That being said,
yeah,
when you think about the whipsaw of oil going from
yeah,
roughly 70 to over $110 a barrel, now back down to 70, I preach this all the time, and I will do it to the day I die, and till I'm red in the face or whatever saying you want to use. Trying to time the markets
yeah,
and trying to look at the market as an excuse of a set of data facts of why you should get in the market, why you shouldn't get in the market. When you go from Q1 to Q2 and you have that big a kind of a turnaround, full circle moment, whipsaw of a lot of data, it just goes to prove the point that it's a long game to be played.
yeah, for
Because if
sure.
you were trying to time all this out,
Oh gosh.
I mean, yeah, because coming into the year, there was a lot of positive data that would have led you to believe that in Q1, that you had a lot of tailwinds. I mean, nobody saw the war with Iran coming,
Yep.
and then how quickly uh, consumer sentiment and financials have recovered since then
Yeah.
is just pretty crazy. It
Yeah.
reminds me, the closest thing I can think of in recent memory is COVID. COVID happened, and it was in March,
Yeah, you're right.
but it was now 6 years ago. Markets off 34% in 30 days. But by the end of the year, the market was roaring. And not only had recovered the losses it had taken, but was up. And again, nobody in March is looking at that in 2020 and going, "Oh yeah, I for sure am an optimist about the end of 2020. This is going to end well for all of us."
Yeah,
And
no.
nobody thought when oil was at $113 a barrel just a couple of months ago that here you and I would be sitting 3 months later going, "Yeah, it's great.
Yeah.
it's
Yeah.
it's
No,
all great."
the opportunity to get whipsawed, or the opportunities to get whipsawed this year, were extreme, and we're only halfway through the year. Yeah, and then the oil price dynamic is really, really interesting, considering that we still, I don't think, have final resolution around the Middle Eastern conflict. And this is something we've talked about before, just our country's energy profile, how much oil we're producing, how much oil we're selling, the resiliency, and it's not just us, but the resiliency of the U.S. private sector, the economy, the energy industry to kind of step up is pretty extraordinary, considering some of the challenges energy markets have had to face this year. It's a real feather, I think, in our country's cap.
It takes a long time for fundamentals to play out.
Yeah.
Emotions always dry. I mean, the fundamentals are starting to play out. I think
Yep.
when it comes to the price of oil,
Yep.
the emotions kind of drove a lot there in the short term, as they always do. But to your point, I don't think that we're all the way to kind of the fundamentals yet. I think there's
Yeah.
still a little bit of uncertainty and emotion tied into what's going on the
Yeah.
price of oil and still at the pump. But um, we're a lot better than we were a couple of
Oh,
months
for
ago. Just
sure.
very interesting look back. So now looking ahead
Yeah.
with all of that we just kind of talking about, rather than kind of this big, broad conversation of, markets, oil, war, it's a pretty isolated thought process here over the next quarter, a little bit of a broken record. I feel like it's a topic you and I were able to get off of for a handful of months at least. But here we are back. It's all about the Fed, kind of coming up. Not all, but I mean, if you had a spotlight and you could point it in one direction for the next quarter, this is probably the place to point it if you could only watch one thing. So talk to us a little bit about that. Why is the Fed so important coming up?
Yeah, so we've got a Fed meeting July. The first Fed meeting under Kevin Warsh was in June. We also had the Supreme Court decision around Fed Governor Lisa Cook and whether or not the Trump administration could remove her. She still may be removed from the Fed, but there's there's going to be a much more drawn out process. So we know what the Fed looks like today and will look like for a while. And I think what's really interesting is, Kevin Walsh in his first meeting as chair kept things kind of short and sweet and really focused on price stability and the need to get inflation back down to 2%, where it's clearly not at 2%. So there's a decent number of folks in the market pricing in a rate hike this month. I don't think we'll get it. I think the Fed's probably pretty happy that oil has round trip. They can make the case that a lot of the inflationary pressures we've seen this year won't stick. They will, to use the word from several years ago, prove to be transitory. But my best guess is, all eyes are going to be on the Fed. They're always on the Fed, but when you've got a Fed chair who's only two meetings in this month, um, and you've got these cross currents between an okay jobs market, sticky inflation, oil round tripping, people are really going to be paying attention to him. Now, they're going to pay attention to him for years, but this is only his second meeting
Yeah.
chairing the world's most important central bank. So I think all eyes are going to be on the Fed near term for those reasons. But I think so far, like or dislike the president, like or dislike his choice as chair, I think Mr. Warsh, sort of did quite well with his first press conference, the way he communicated to the street. I think his performance was very well received, which is a good thing for markets for sure.
Yeah, and obviously that, as most of our listeners probably know from if they're listening to past monthly market commentaries, obviously has a decent bearing.
Yeah,
It's definitely not the only ingredient, but a decent bearing on earnings for all these publicly traded companies that we're paying attention to too. And with Q2 earnings coming up, it's going to tie in there for us as well. So going to be
for
an
sure.
interesting quarter to pay attention to what the Fed is doing. That's kind of nerdy though. I say that, and then I feel like I feel like I'm you know trying to get people interested in things that maybe they don't want to be interested in. I feel like that's what happens at World Cup time in the United States all the time. So there's a lot of people that are only interested
Yeah,
in soccer when it's World Cup time.
yeah, yeah. No, and then obviously the U.S. tough loss to Belgium. That was, man.
Yeah, I was at a baseball game. I know that's going to
I went to
surprise
bed.
you,
I went to
so I
bed
didn't
at
get to
half.
watch it, but
Yeah, not.
I did look on my phone, and I can tell you, I'm one of those people that doesn't pay any attention to soccer until
Yeah,
the World Cup, and then the
yeah,
second the United States is out, I'm not all that interested in it again. I'm not saying it's a bad sport. I don't want to like
yeah,
disenfranchise people that are listening that love soccer.
yeah,
It's the most popular sport on planet Earth. I get it,
yeah.
but
Well,
yeah.
and a
So
quick question for you, not to chew up all the time. So as I'm thinking about the great state of Minnesota, I'm thinking lots of settlers from Northern Europe. Am I thinking Sweden or am I thinking Norway as well? Because Norway's got that 6'5" guy. I'm just
yeah,
curious. What's the historical demographic makeup? I just remember listening to Garrison Keeler in the news from Lake
we have
Wobegon.
both.
Okay, there you go. So
Yeah,
then
we have
that
both.
Norwegian team is incredible.
Yeah. I'm blanking on that guy's name right now. One of
Yeah,
my good buddies, his son is obsessed with him, and so I
it's like
should know his name.
Holland. It's sort of. I mean, my last name's Holland. I think it's pronounced somewhat. I'm not trying to hitch my wagon to his horse, but is it Holland or something? I don't know. That guy's unstoppable. Anyway, I don't know. I thought
Uh,
maybe the great state of Minnesota was, with the U.S. knocked out, maybe
there's
you
a good
could
amount of soccer players up here,
lean into the Norwegian team and that guy. I don't know.
and well,
Anyway, I
it
digress.
is the doldrums of summer for sports because
Yeah,
hockey's over, basketball's over, and now we just have just not. I'm a baseball guy, but we're just
but
in
it's
the
a
middle
little
of the
early
regular season of
still.
baseball,
Yeah,
and football hasn't
yeah,
started, and
yeah,
so it's a good time for the World Cup to be on TV.
yeah,
I
for
guess is what I'm
sure.
trying to say. Okay, the data point worth discussing.
Yeah,
I'm calling this point what goes up must come down. Now, that's true in a lot of areas of life, and it's kind of true of what's going on in the markets right now.
yeah,
It's very interesting when you look at the data because we talked about the markets; they're up. We all know
yep,
that.
yeah,
But what's interesting about it to me is that although the markets are up, the PE is the price to earnings ratios of the market are down.
yeah,
Why is that? Tell us. I think
yeah,
it's interesting. I think you think it's interesting.
yeah, yeah.
Why is that interesting, and why is that worth paying attention to?
Yeah. So when people think about buying a stock or an index that represents, is made up of a number of stocks, they'll think about valuation, good time to buy, bad time to buy. But if you're a long-term investor, you kind of step back a little bit from that. And so as you pointed out, the price to earnings ratio, probably the most widely accepted valuation metric for looking at a company or an index. And coming into the year, the S&P 500 collectively was trading at 22 times expected earnings looking out 12 months. There's lots of different ways to look at a PE ratio and a look back on an expected basis, somewhere in between. And so 22 times expected earnings is kind of expensive relative to history. Ideally, you can still buy a stock with a low PE ratio, but it could be a bad company. So just because a low PE ratio doesn't necessarily mean a good investment, and a high PE ratio doesn't necessarily mean a bad investment. But 22 times expected 12 months earnings is elevated. But to your point, even with the S&P 500 up 10% or so year to date into early July, Wall Street could be wrong, but Wall Street has raised its earnings expectations so much for the S&P 500 on a go forward basis that even with a 10% jump in the overall price of the index, the PE ratio has fallen to 20 times, which is a pretty darn good thing to happen, where market gains are pretty impressive, but earnings growth and expected earnings growth is so rapid that even as prices go up, the valuation becomes that much more attractive. And at least, knock on wood, that's where we are right now. There you go.
Yeah. And to your point, it is an expectation of Wall Street.
Yeah,
It's not gospel. But
yeah, yep,
and I'm going to put you on the spot here a little bit,
yeah.
and so if I'm catching you off guard, it's fine.
It's okay.
What is driving the majority of that from a Wall Street perspective? Why are they so bullish
Yeah.
on expected earnings?
I think what happens is, and there's obviously some smart folks at these big Wall Street banks and investment firms that arrive at these numbers, and we look at those numbers as well and do our own analysis. I think, you know, earnings growth has just consistently beaten expectations for 4 or 5 quarters now. So some of that is a little bit of a sort of a muscle memory. You're sort of looking back, they did it again. I'm going to sort of bake in maybe better than expected growth than I had. But a lot of this is also driven by management guidance. So as you know, you've been in the markets a long time. Company XYZ reports their quarterly results. Here were sales, here were earnings, here's how we did from a fundamental point of view. And either they're going to tell the street, Wall Street, or Wall Street's going to ask, well, how's business today? And what do you expect business to look like over the next 3, 6, 9, 12 months? And a lot of this is just corporate America telling Wall Street that business is still really good. We've had trade uncertainty. We've had a geopolitical backdrop that's really challenged. We have a still somewhat depressed consumer from a consumer sentiment point of view. But the last thing I would think a company's management team would want to do is overpromise and underdeliver. So even with this optimistic guidance, it's typically tempered a little bit, because why not sort of underpromise and overdeliver? So I think a lot of it's just much better than expected growth for several quarters in a row now. And these management teams of these very important companies telling us that even with all the challenges out there, the economy is in really good shape.
Yeah. Uh, Very interesting, in my
Yeah,
opinion, that we've
yeah,
got the level of price increase we have, yet it's still based on what we talked about. And again,
yeah,
it's cheaper per
yeah,
dollar.
yeah, yeah.
Um,
It's a good spot to
you
be.
pay more, but get more is
Yeah,
essentially kind of what the market is trying to tell us right now. So that's going to be interesting to pay attention to as we move forward as well. I can't go the entire monthly market commentary without mentioning the fact that we had the largest IPO ever, SpaceX. I've
yeah,
never had more questions about it, any IPO than this. But what's interesting to me, because that already happened, is we've got two other companies that have filed for IPOs coming up as well. That is going to be interesting to watch in OpenAI and Anthropic, the two
yeah,
largest platforms that most people are using from an AI perspective. It's going to be interesting to see if the market can handle two more
yeah,
major IPOs like that, and what that's going to be. I feel like there's been a lot of money sitting around
yeah,
without a place to go, and without a
yeah,
home. Um, and can we eat up two more large IPOs like this, and when are they going to IPO and stuff like that? So I'm not saying it from an investment perspective. I don't think buying and speculating the second an IPO comes out as an investment move. I think it's a gamble. Not that you shouldn't, you know, gambling is gambling, but um, just interesting to talk about. Fun around the
yeah,
water cooler.
yeah. No, and I would think if market conditions cooperate, the SpaceX IPO, by all accounts, was a success. It's off its post IPO highs, but still 30, 40 bucks above its offer price, or at least where they priced it at 135 bucks a share. And it's all things AI right now, right? I mean, the technology just continues to be adopted. So I would think if conditions cooperate, and I have no particular insight here, but those two companies and their bankers are going to want to go public this year. Maybe wait until the summer's over when people are sort of back at their desks. But for sure, it's going to be interesting to see how much new equity the markets can absorb, especially if those two companies come public this year. And I would think wherever they price, it's probably going to be the second and third largest IPOs in the history of IPOs, following on SpaceX. So we're going to make history probably kind of a few more times this year.
It's given the mutual fund companies something to talk about for the first
Yeah,
time in about 50 years. So uh, we're changing the dynamic of the fund a little bit finally.
yeah, yeah,
Um,
yeah,
Little pot shot there. Tim, it's always great to talk to you. It's always great to
yeah,
get some of these insights. Um, as always, you guys were here just for that purpose to provide a little bit of insight, things that we're watching. Obviously, Tim and I aren't the ones making executive decisions on some of these portfolio moves and the overall kind of design of your plan. That's your direct financial advisor, and we're building it with the global picture of your family in mind, not based on individual investment points like we're making in the monthly market commentary. But it is interesting as we pay attention to this as long-term investors to know what moves the market because education is power. And as long as you always remember, if you go back and watch every one of these monthly market commentaries for the last 3 years or however long we've been doing this, Tim, one of the themes that you're going to realize is we're always surprised by what comes tomorrow.
yeah.
But historically, over time, things play out in our favor. And so, sticking with that long term mindset, just want to end with great short term insights, great short term conversations, and things to be thinking about, but always keep that long term hat and mind on as you continue to make decisions for your family. Tim, as you continue to make decisions for your family, I hope your kids continue to give you time outside of
I'll take what
sports.
I can. I'll take what I can get. Yeah.
As a guy that has aging kids too, and my first one of the driver's license, man, it goes
Oh
really quick, and
man, goes
you
by.
start to lament
Yeah,
about the fact that they're building lives of their own, and
yeah. Goes
kind of
by
moving on.
quick.
But
Yeah, no, it's exciting, but yeah, a little bittersweet, and
yeah,
yeah, yeah. No, I hear you.
well,
So
enjoy your new digs.
yeah, no, we will. I don't mean to be bossy. I know you normally take us home here, but make sure you have your seatbelt on, and 10 and 2, 10 and 2. All right,
I think it's 9-3. They say now.
really?
I think. Well, yeah, I think you're just. I think you took driver's ed a
Oh,
couple years ago. I think.
oh, I'm older. In the
Yeah,
'80s, it was 10 and 2. See,
yeah.
there you go.
You were pre cruise control. I think.
Yeah, yeah. Oh, yeah. I'm pretty sure I was. I used to have to crank the handles too. So
Yeah,
anyway,
yeah. Oh, I love it. All right, thanks for
uh,
joining us for this month's monthly market commentary. If you need any more information about fiat, what we do, who we are, anything like that, you can check us out at our website. It's fiatwm.com. Until next month, Tim, great to see you. Great. And I think we've got it worked out for you to come out sometime this summer. So for all of you, be looking. I think we're going to have Tim come bless us in person at one of our upcoming events. So a little tease for you there, and we'll see you all next month.